Holy moly, guys. Dow plunges 1,000 points on coronavirus fears. 3.5% drop in worst day in 2 years. This was only published on February 23rd. But then as we go along to February 25th, coronavirus cream stock again. Dow hit by biggest back-to-back point drop. The Dow Jones index suffered its biggest two-day point decline in history, and the Dow, S&P 500, and NASDAQ Composite all have turned negative for the year. Holy moly, guys, welcome to another 9 to 5 dividend investing video. I am Mike, and in today's video, we're going to be discussing my new investment strategy. Well, it's not new. We're going off an old strategy, but we're putting a little spin on it. The dogs of the Dow and investing in the dogs of the Dow. So what do you do during this time? Do you panic sell? No. Do you buy Bitcoin? Maybe. Do you buy bonds? Maybe. But I invest in the dogs of the Dow. And the dogs of the Dow method is not a new method. It was first talked about, or I believe it was first talked about, by Michael B. O'Higgins in the book Beating the Dow. You guys could check this book out. Excellent idea. How to invest and what to invest in. Kind of an idea that you don't really have to put much effort into. But like I said, we're going to be putting a little spin on this method. So guys, I took a couple steps in investing in the dogs. So step one, I opened a brokerage account. Brand new brokerage account with Fidelity Investments. The reason I chose Fidelity is because you can invest in fractional shares, and they're a very well-known investment firm. I could have done Robinhood, but I, again, as I've said in previous videos, I'm not a fan of Robinhood. I don't believe that they have all their ducks in a row. So I opened up an account with Fidelity Investment, and a brand new account, and this is where we're going to start our investment in the dogs. So guys, after we open up a brand new brokerage account, what do? Step two, what are the dogs of the Dow? For no further, let's check out Investopedia. So Investopedia, what are the dogs of the Dow? The dogs of the Dow is an investment strategy that attempts to beat the Dow Jones Industrial Average each year by optimizing toward the highest yield investments. The general concept is to allocate money to the 10 highest dividend-yielding blue chip stocks among the Dow 30. The strategy requires rebalancing at the beginning of each calendar year. And we got a couple more key takeaways there. One of the biggest ones that I would like to point out is the strategy's track record shows that it beat the index during the 10-year stretch that followed the financial crisis. So guys, now that we understand what the dogs of the Dow are, what stocks fall into this category? What stocks are the 10 highest yielders of the Dow Jones? These stocks were selected January 1st of 2020. Every January 1st is when these stocks are picked. So from that time, these yields may have changed. But we are still going off of whatever the list was for January 1st, 2020 in order to keep it consistent. So guys, the 10 highest yielding stocks in the Dow Jones for January 1st, 2020 were, thank you to the Motley Fool, Dow Chemicals, ticker symbol DOW with a 5.12% yield, ticker symbol XOM, ExxonMobil with a 4.99% yield, IBM with a 4.83% yield, Verizon with a 4.01% yield, Chevron with a 3.95% yield, Pfizer with a 3.88% yield, ticker symbol MMM or 3M with a 3.26% yield, ticker symbol WBA or Walgreens with a 3.10% yield, Cisco Systems with a 2.92% yield, and Coca-Cola with a 2.89% yield. So guys, this brings me to step 3, investing in the dogs. But what we did, we put a little bit of spin on Michael B. O'Higgins' method, and instead of investing an equal amount of money in each of the 10 stocks, we bought one share of each of the 10 stocks in our new Fidelity account, and here they are. We bought one share of Cisco Systems at a cost basis of $44.27, one share of Chevron at a cost basis of $104.89, 1 share of Dow at 46.40, 1 share of IBM at 146.88, 1 share of Coca-Cola at 58.78, 1 share of 3M at 153.03, 1 share of Pfizer at 34.84, 1 share of Verizon at 58.12, 1 share of Walgreens at 49.27, and 1 share of ExxonMobil at 56.73. We bought all these stocks on February 24th, and next February 24th we'll rebalance this portfolio. But as of that day, we were already down 0.32% with a total of $2.58. So guys, this brings me to step number 4. Yes, there is a step 4 to this crazy method that we're doing. Due to the fact that this book was written, I believe, in 1991, they did not have fractional shares. Since we live in the year 2020, we now have fractional shares, especially with firms like Fidelity or M1. So since we opened up this new brokerage account, invested 1 share of each of these high-yielding stocks from the Dow, we are also going to add between $25 to $50 every week into the stock that we are down the most on. So this week, we're showing you the portfolio. Next week, we're going to show you what stock we're going to buy. It's going to be whatever stock we are down the most on. Rule to that, we are going to not invest in the same stock 2 weeks in a row. So if next week we buy $25 to $50 worth of 3M, the following week we will not buy 3M even if we are down the most on it. This will even out the portfolio a little bit more, and every week we're going to change that. So guys, this is a brand new portfolio that we're going to track for the next year, see how we do. The goal of this portfolio is to beat the Dow. I know for a fact last year the dogs of the Dow did not beat the Dow, but it was only off by a couple percent, especially after you add in whatever dividends were received. And when we receive dividends for these stocks, those dividends will get reinvested back into whatever stock we are down on the most. This is in addition to my $25 to $50 every week. Whenever we get a dividend, plus whatever money is there that week of the $25 to $50, we'll put in whatever we're down on the most. So guys, again, if you want to follow Michael B. O'Higgins' method, buy the book Beating the Dow by Michael B. O'Higgins. A high return, low risk method for investing in the Dow Jones with as little as $5,000. I'm very excited about this new portfolio and look forward to sharing this portfolio with you guys and how we're going to grow this, especially now that if the Dow or the stock market is trending downward, this is going to be really fun to look at in the future and see how we do against the Dow and how we build out this portfolio. So guys, keep it here. More 9 to 5 dividend investing coming your way. And always remember, like and subscribe. Really appreciate it. Really appreciate the comments. And always remember, dividend invest.